Hello everyone. Well, risk aversion, the on-off trade, remains the key theme in the markets. However, now risk on means buy dollars, and the switch between risk seeking on good US news and risk aversion on news coming out of Japan is whipsawing the market around. The DXY index of the dollar's value has made 3 new 2013 highs over the past 5 days, but it hasn't been able to sustain the gains. Central banks continue to dominate the market. Early this morning, for example, we saw a sudden 1 yen drop in dollar yen after Bank of Japan Governor Kuroda said that the Bank of Japan had announced sufficient monetary easing. I tend to agree with him. They just announced the largest quantitative easing program of any central bank less than 2 months ago. It would be premature to decide that it was insufficient. Meanwhile, in the US, people are worried about the possibility that the Fed tapers off quantitative easing. But they should remember what Fed Chairman Bernanke said in 2008. He said, "I made my own mistakes, but I don't want to make somebody else's mistakes." He said this in reference to the Fed's error in tightening policy too soon in the 1930s, an era that he's an expert on. And also perhaps thinking about Japan's premature ending of its quantitative easing in 2006. I don't think he will let the Fed exit prematurely. That's why the risk-on mode can continue. In the current risk-off mode, the Swiss franc has strengthened somewhat, with both Euro Swissy and Dollar Swissy falling back. Investors with a longer time horizon might want to consider looking at these pairs. I think they represent good value now, as I expect risk-seeking to come back and investors to move out of the Swiss franc over time. Plus, with the Swiss National Bank still setting a floor against the euro, there's a limit to how much downside there is in the trade. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.